You've probably noticed that hand-to-hand old-school cash transactions are becoming obsolete as technology advances. Did you know that in May 2016 it was the first time that there were more debit card transactions than cash transactions in the Netherlands? And that people above 75 or below 18 are the only ones rather using cash? Traditional banks and basic transactions are transforming from physical to digital channels. So what does this mean for you? For starters, the disrupting financial technology companies, also known as fintech companies, are taking over volume in value payments and lending from banks, thus dismantling banking monopolies. So how does this look from a framework perspective? For example, the rivalry among existing competitors in the fintech industry is very high, as Porter's 5 Forces illustrates it. Switching costs for consumers are very low, which leads to higher bargaining power of buyers. On the other hand, threat of substitute is high, since the competition within the fintech industry is fierce. The bargaining power of suppliers is high, as companies within the fintech industries now face the need to partner with tech startups. Threat of new entrants is rather low, since the initial investment is very high compared to extremely low production costs. Regarding the business model, from a revenue perspective, this means that the initial investment is extremely high in comparison to the unit replication costs. This also implies that economies of scale play an important role in the success of a company within the fintech industry. They do so by taking advantage of cloud computing, mobile communications, digital currency, and blockchain to bring new businesses to market. So how do they do it? To begin, fintech startups differentiated themselves from traditional financial firms through offering personalized niche services, data-driven solutions, an innovative culture, and a nimble organization. Fintechs have also managed to take costs out of the middle and back office, where employees have been doing simple, repetitive tasks. Instead, employees are now being retrained to be advisors rather than bankers. Not only is the growth of fintechs disrupting the banking sector, it's also helping grow the e-commerce industry. Online fintech banking providers are helping drive e-commerce growth by simplifying the online payment process. Now that we know a little about what fintechs are and their effects, let's learn more about the fintech ecosystem. The fintech ecosystem is comprised of 5 elements, with fintech startups at the center, aided by technology developers who provide digital platforms and big data analytics to personalize customer services. Next, they are supported by cloud computing, as well as the government, who has been providing favorable regulatory environments for fintechs. Financial customers are the main revenue drivers for fintechs. All of this success is causing financial institutions to now reevaluate their existing business models in order to strategically position themselves against or with fintech innovations. These elements contribute to innovation, economic stimulation, collaboration, and competition within the financial industry. One of the questions that remain is how traditional banks reacting to fintechs. 2015 saw that some European countries securing record levels of investment in fintech startups. According to Harvard Business Review, more and more traditional banks are starting to invest in fintechs to learn, collaborate, and partner with them. Barclays, ABN AMRO, and Rabobank have all created startup programs to incubate fintech companies as a way to learn how they should adjust their business models. In a research by Accenture surveying 589 bank executives across 30 countries, 90% agree that their organization must innovate at an increasingly rapid pace just to remain competitive. There are 3 examples of how technology are increasing the online payment system industry. Let's take a closer look at some Dutch-based companies. Now, to all you Uber users, Netflix chillers, or Spotify addicts, how do you pay for it? Aiden. Aiden is the technology company reinventing payments for the global economy. It's the only provider of a modern end-to-end infrastructure connecting directly to Visa, MasterCard, and consumers' globally preferred payment methods. Aiden delivers frictionless payments across online, mobile, and in-store, with offices all around the world. Aiden serves more than 4,500 businesses, including 8 of the 10 largest US internet companies. Another problem you might have encountered is when it comes to separating the bill at a restaurant with your friends. Tikkie is the answer for you. Tikkie is a Dutch application made by the ABN AMRO that makes it easy for people to pay back money you lent them or paid in advance. This application makes use of WhatsApp and the contacts you have within your phone. In this way, everyone in the Netherlands is able to pay you back. You only need a bank and the money can be transferred straight away. No need for an identifier. Remember the time when you actually went to the bank to set up your bank account or do a transfer abroad? Well, this inconvenience has been solved. Bung is very handy for internationals in the Netherlands, as everyone can open an IBN account within 5 minutes. Bung also makes direct real-time payments possible. Bung aims to be the WhatsApp of the banking world. Quick to set up, easy to use, real-time and fully mobile. So how do we think the financial industry will be revolutionized in the future? Well, according to the World Bank, developed markets banks could cut commercial bank branches up to 50% by 2025. The new currency across the industry is speed. So online payment systems need to be quick to set up, easy to use, real-time and fully mobile. Apple has started reinventing online payment systems with Apple Pay, which is not only fast and easy to set up, but also provides a seamless experience to its users. One of the issues we are going to face with the new online payment systems is that of cybersecurity. For instance, selfie, authentication, or even biometric authentication, where Fitbit, for example, could enable your authentication with its heartbeat technologies. Think of apps that track spending habits, apps that send notifications for the best time to get a beer during a crowded concert, or apps that ease bookkeeping by automatically categorizing transactions. They'll probably all be integrated and they will revolutionize the online payment system. Fintechs are the future of banking, but fintechs are merely the tool. We must help transform the industry.